let's begin with today's topic about the fundamental analysis. Now see, fundamental analysis is a very vast subject. There are courses that are specially dedicated to the fundamental analysis. Now to read and to interpret the financial statements, that is the balance sheet and the profit and loss account of a company, is not an easy task, especially if you are not from a commerce background. So as a layman, if I want to do fundamental analysis of any company, then what are the important points that I need to look into the balance sheet or the profit and loss account of a company, or what are the important key ratios that I need to look into that will give me an idea whether the company is fundamentally strong and worth investing or not. So the website that we'll be using is screener.in. Simply type screener.in in your browser, and this is the website that we'll be using for our fundamental analysis. Now let us take an example of Hero MotoCorp. Now this page will open up in front of you, which will give you the detail of Hero MotoCorp. This shows you the market cap. What is the market cap of Hero MotoCorp? This shows you what is the current price, what is the 52-week high and low, what is the book value of the company, what is the PE ratio of a company, what is the dividend yield, what is ROCE, that is return on capital employed, what is your return on equity, sales growth over the past 3 years, and what is the face value. Now this is a free website. You can create your login ID, and once you log in, then there are other parameters that you can add, putting searching for those parameters in this block. Like if you can see in this, oh, this is the same. Let me log in first. Something not working. Okay, now I'll add Hero Moto. Fine. So other parameters that you can see that I have added up over here is, along with return on capital employed and return on equity, that is EPS. What was the EPS last year? What was the EPS prior to that? And what is the current EPS? Also, what is the debt to equity ratio? What is the promoters holding and industry PE? Now, the key ratios that we need to look into while doing the fundamental analysis of a company is, first, that we need to see EPS, that is the earning per share. The earning per share of the company should either remain constant on a year-to-year basis, or the EPS of the company should increase on a year-to-year basis. It should not be like that this year it is 15 and the next year it becomes 14 and then 13. Either if it's 15, then it should remain 15, or the EPS should increase on a year-to-year basis of a company. Second thing that we need to, the important key ratio that we need to look is the debt to equity ratio. The debt to equity ratio for the current year of a company should be less than 0.50%. because if there is too much debt on the company, then whatever profit the company is earning, most of it will go in paying the interest of the debt that the company has on its head. So the debt to equity ratio of the company should also be less. It should be around 0.50%. Also, it should be a dividend paying company, because if it is a dividend paying company, then it gives us an assurance about the company, about the stability of the company. And ROE, that is the return on equity. The return on equity of any company, if it's more than 15% on a year to year basis, then that is considered to be a good company, because we can rely on the management of the company. We can say that the management of the company is good. So the key ratios that we need to look into while analyzing a company is, first, that the EPS of the company should either remain constant or the EPS of the company should increase on a year to year basis. It should be a dividend paying company. ROE, that is the return on equity, should be more than 15%. Then you need to see the promoters holding as well. Promoters holding anything above 50% is considered to be good. Now when we were discussing about Nifty in our first session, we talked about PE, that is price to earning ratio, in which I said that if the PE of the if the PE is too high, then we cannot consider entering into the market. But now over here we are talking about a stock. So over here we cannot just individually look at a PE and decide whether we should enter into a stock or not. We cannot and do analysis of PE on a standalone basis, because we are looking at a company. So if we are looking at a company, then we need to compare the PE of the company with other peer companies in that sector. Then we need to look at the PE of the industry. Then only we can decide whether the stock is overvalued or undervalued. In case of Nifty, we can say that okay, now that the PE is about 28, so we can see a correction in the market, or the market is expensive and we need to exit our positions. But when it comes to PE, when it comes to stock, you may find that PE of many stocks are very high. But in that case, you need to compare the PE with the PE of other companies in that sector, and you need to look at what is the PE of the industry. Now this, if you see the graph over here, this is last 1 year's graph, and it looks as if Hero MotoCorp is in a downtrend from the past 1 year. If you see, the stock is continuously making lower highs. Now these are the pros of the company. Company is virtually debt free. Now as we have seen over here, debt to equity ratio is less than 0.50. It's almost zero. That means there is no debt on the company. Stock is providing good dividend yield of 3.55%. As I told you that it should be a dividend paying company, which gives us an assurance of the stability of the company. Promoter stake has increased. Now here it is saying that promoter stake has increased, but though if you look at the cons, the promoters holding is low. As I said, the promoters holding in any company above 50% is considered to be good. Now company has a good return on equity track record for past 3 years. It is 35%, and I told you that return on equity, if it is above 15%, then we can consider that the company is a good company. Company has been maintaining a healthy dividend payout of 49.02%. And if you see the cons, as I told you, the promoter holding is low, and the company has delivered a poor growth of 6.28% over the past 5 years. These two are the cons. No problem. Let's go further. Now over here you can do the comparison with other peer companies in the group. Now see, if you analyze the PE of the company, look at Eicher Motor and TVS Motor Company. look at the current market price, you look at the market cap. So if we see the PE is not too high compared to Eicher Motor and compared to TVS Motor, and the dividend yield of the company is also good in comparison to Eicher Motor and TVS Motor. This is your quarterly net profit, sales quarterly. You can check over here. Now these are your quarterly results. Now another important factor that you need to see, this is the quarterly result that we will see in the annual results. Let's first look into the annual results of the company, the profit and loss statement. Now to see if the company is fundamentally strong or not, the sales of the company should be increasing. There should be a growth in the sales of a company. Now if you see from March 2007 to 2018, if you look at the figures of the sales from 9895, the sales of the company are continuously increasing on a year to year basis, though the expenses are also increasing in comparison to the sales. Operating profit should also be increasing. Operating profit and operating margin should also be increasing on a year to year basis. So here we can see that the operating profit of the company is also increasing on a year to year basis. So is the operating margin of the company is increasing on a year to year basis. And if you look at the interest is almost, there is no interest at all because it is a debt free company. And here we can look at the EPS of the company. As you can see that the EPS of the company is increasing on a year to year basis. As I told you that the EPS, either the EPS should remain constant or the EPS should increase on a year to year basis. Profit before tax, if you see the profit, because if the company is growing, we can consider company to be fundamentally strong. If the sales of the company is increasing and the profit of the company is increasing, that gives us an idea that the company is growing on a year to year basis. Profit before tax, if you see, it is increasing on a year to year basis, and net profit is also increasing on a year to year basis. Similarly, you can also look at the quarterly results of the company, because once if you have invested in any company, then you need to keep a track of the results of the company. So for that you need to look at the quarterly results, you need to look at the half yearly results, and then you need to look at the yearly results, that annual results that are out of the company. That will give you an idea whether the company, there is a growth in the company or not. So in this also, these are the factors that you need to see, that the sales are increasing and the operating profit of the company should be increasing, and the operating margin of the company should also be increasing. Now over here we are talking about a good company, and also another important factor that you need to keep in mind is you need to look at the reserves of the company. The reserves of the company should there should be enough reserves in the company. The reserves in the company should also be increasing, and the company should be a cash rich company, which we can see from the cash flow statement of over here. See net cash flow, it's in the figure isn't positive. If you want to do a detailed analysis, you can click over here. This will give you cash from operating activity. This will give you the bifurcation of this cash from operating activity, profits from operation, working capital changes, tax paid, then cash from investing activity. Now cash from investing activity, if you see these figures are in minus, that means, which is a good sign, because the company is purchasing fixed assets. If you see, the company has purchased a good amount of asset, and assets sold is very less. And even if you see the investment purchase, these figures are also in minus. So this is also a good sign. The company is investing. They are purchasing fixed assets and they are purchasing some investments. Now, similarly, if we look at some other company, let's say we look at Suzlon Energy. Now see the market cap of the company is 3059 crore, current price is 5.75, 52 weeks high is 12.98, low is 2.70, book value is in minus, there is no PE, dividend yield is zero, sales growth is in minus, return on equity, there is no return on equity at all, return on capital employed is also very less. Look at the EPS. EPS, the figure here is in minus, debt to equity ratio is minus 1.72, and the promoters holding is very low. Now let's look at the cons. See the graph, this is 1 year graph, and the company you can see is in downtrend continuously. No pros, the company has got no pros at all. Company has low interest coverage ratio. Company has delivered a poor growth of 15.12% over past 5 years. Promoters holding is low. Promoters have pledged 76.72% of their holding. Now, in a company where the promoters have pledged their holding, this is not a good sign for any company. Earnings include other income of 120.40 crores. Now, see, whatever business we are investing in, if we are investing in Hero MotoCorp, then we want the company should profit from that business. If the profit from that business is less compared to profit from other income, then that is also not a good sign for any company. And here it is showing that earnings include an other income of 120.40 crores. Now here you can do the comparison with the peer companies. If you see the PE, there is no PE in the company at all. Dividend yield is zero. Quarterly net profit, latest quarter is in minus. Year on year quarterly profit is in minus. Now if we look at the quarterly results of the company, so you see in March 2007 the sales was somewhat 7986. From there it went up, and then from last 2 years if you see the sales are declining. And if you see the expenses and sales, you see there is very marginal difference between expenses and the sales of the company. Operating profit of a company, you can see how they have declined from 1312 to now it's around 101. Operating margin of the company has gone down drastically from 16% to only 2%. Interest, if you see, the interest is increasing. That means that there is a lot of debt on the company from 276 to 1608. Other income, you see the other income of the company is increasing. EPS has declined. EPS is almost zero now. In 2007, the EPS was 5.58. Then in March 2008, the EPS was 6.70. After that, you can see that EPS is almost zero now. Dividend payout, it is not a dividend paying company. It paid dividend only for the 2 years. Reserves of the company are in, the figures are in minus. And if you see the borrowings compared to the reserves, this is not a good sign for any company. The company's profit is in minus, plus you can see the debt that this company has got around 10,313. fixed assets of the company, if you see fixed assets of the company has gone down. It was 3619. That means company has sold off their fixed assets as well. The only positive thing about this company is that this is the cash flow is there, but all other factors of the company are negative. So we can say that this is not a good company to invest into. So the main points that what you need to look into while analyzing a company is that the sales of the company is increasing on year-to-year basis, profit of the company is increasing on a year-to-year basis, EPS of the company either it should remain constant or EPS of the company should be increasing on a year-to-year basis. It is a dividend paying company. The debt to equity ratio, if you see for the current year, should be less than 0.50%. The cash flow of the company needs to be positive, because if the cash flow of the company is negative, then how can a company do profit? So the cash flow needs to be positive. Then return on equity should be above 15% of the company, and if you can include return on capital employed, then this figure should be about 30%. And PE generally is considered less than 10. PE is considered to be a good, but now we are not going to analyze PE individually. We need to compare it with other companies in the sector, and then we need to look at the industry PE. Then only we can decide whether the stock is overvalued or undervalued. Now if you want to do a more detailed analysis, then we can use money control website also. In this, if we type Hero Moto, now over here also you will get a complete information. This gives you what is the price of Hero Moto in BSE, what is the price of Hero Moto in NSE, open price, close price, everything this will tell you. Now if we move down, this also gives you a centimeter that what are the sentiments of the people, that 53% of the people are saying buy and 44% are saying sell and 3% are saying hold. Now we need to look into the, if you want to look into the financials, you can click into the financials. This will give you the balance sheet, profit and loss, quarterly results, half-yearly results, 9 monthly results, yearly results, cash flow ratios that you can see. And if you want to see the shareholding pattern, let's look at the shareholding pattern of the company. Now this will give you the detail of the shareholding pattern of the company. What is the promoters holding? How many institutions or how many mutual funds are there? As you can see over here, if we look at this point, shareholding of promoters and promoter group. So here it is showing 34.63% as the shareholding pattern, which we saw over here in Hero Moto. Promoters holding 34.63%. So this is the same figure that you can get over here, 34.63%. Individuals, Hindu, undivided family, 13. Any other 3. Now if you want to look further, foreign investors, how many foreign investors are there? So total shareholding of promoters and promoter group A is 34.63%. Now if you look at the public shareholding, mutual funds, there are 31 mutual funds. Financial institutions, there are 33 financial institutions. Insurance companies, 15 insurance companies, and qualified foreign investors are 797. So this will give you an idea as to how many mutual funds and how many FIIs are holding their positions in the company. So if you see 53% is around these institutions, FIIs and DIIs that are holding, they have holding in the company. So the holding of promoters is less in comparison to FIIs and DIIs in Hero MotoCorp. Non-institutions, this will give you the detail of non-institutions that are holding positions in the company. Now, if you want to look into the mutual funds holding, how many mutual funds are holding in the Tata Motors? This is only if you want to do a more detailed analysis. This will give you the name of all the mutual funds and their holdings, when they bought and when they sold, how much they bought, how much they sold. If you see the list is too big, if you want, you can go through the list. It will give you the name of each and every mutual fund. LIC, L&T, Reliance Equity Saving Fund, Reliance ETF Nifty Bs, all those mutual funds there that have their holdings in the company. You can see the list from here. So for promoters holding mutual share, you can see the shareholding pattern, the mutual funds holding from here. From financials, you can see the balance sheet and the profit and loss statement of the company. You can do analysis on in money control also. Now another website that also you can use for your fundamental analysis is Market Mojo. This is another website that you can use for your fundamental analysis. Nifty's. Let's look at the company Hero Moto. This will give you all the details. What is positive for the company, what is negative for the company. 31.77% fall from high. This large cap stock with excellent quality and attractive valuation looks very positive for long term. However, with negative quarterly financial trend and bearish technicals, it looks very negative for near term. It tells you whether the company is attractive at the current level or not. What is the PE ratio of the company? What is price to book value ratio? The dividend yield, the ROC latest, ROE latest, everything you get to know from this website. Profit and loss statement, you can look at the profit and loss consolidated. What is the net sales, whether the net sales have gone up or the net sales has gone down. Cash flow statement, you can see shareholding pattern. You can see over here 34.63% is the promoters holding, 39.95% is FII is holding, and then mutual funds, other DIIs. This gives you a breakup of everything. It gives you the name of the promoter with the highest holding, highest public shareholder. Cash flow it gives you. It also gives you the comparison with the peer companies, that which company is looking fundamentally strong. If you see, this gives this website does fundamental analysis on the basis of quality, valuation, and financial trend. If you look at Bajaj Auto, so the quality is excellent, valuation it is showing as fair, and the financial trend is also it's flat. Aisha Motor, if you see, it's showing excellent, valuations are fair, and financial trend it is showing negative. So these dots, they just work like your traffic signal. If you see Atul Auto, this is showing that the quality is excellent, the valuation is also attractive, and the financial trend is also positive. So this website is doing the comparison of Hero MotoCorp with its peer companies and giving you the output that which company is looking more attractive in this peer group. So this website also you can use for your fundamental analysis. And another website that can be used for your fundamental analysis is if I type simply Hero Moto Morningstar, and where this NSE is mentioned, if I click on the link, so this is the page that I will get, and we need to look at the key ratios. So I will click on key ratios. Full key ratio data. So this is what I will get. Now the points that I told you is that what we need to see first is that the EPS of the company is increasing on a year-to-year basis. So if you look into the financials, if you see the EPS of the company, you can see that this data is from 2009 onwards. So if you see the EPS of the company from 2014 onwards, the EPS of the company is increasing on a year-to-year basis. Is it a dividend paying company? So if you see, yes, it is a dividend paying company. Operating cash flow, I said it should be a cash rich company. If you look into the operating cash flow, yes, it is a cash rich company. The company has got good amount of cash. Return on equity. Return on equity is greater than 15%. So if you see from 2009 onwards, the return of equity is about 30% of the company. So this is a good sign for the company. If I look into the financial health, and if I see debt to equity ratio, so if I look at the current debt to equity ratio, it is less than 0.50%. So all our criterias are met over here. The EPS of the company is increasing. It is a dividend paying company. It is a cash rich company. Return on equity is more than 15%. Debt to equity ratio is less than 0.50%. Plus, we have seen on screeners.in that The sales of the company is increasing on a year-to-year basis. The profit of the company is increasing on a year-to-year basis. So everything for the company is positive. The only thing is that the promoters holding is low. If had the promoters holding be above 50%, then that would also be a good sign for the company, but doesn't matter. Rest all the key ratios that we want are perfectly fine for the company. So these are the important key ratios that you need to look into while analyzing a company. These are the key ratios that any layman can look into and can decide whether the company is fundamentally strong or not. If you want, we can look into any other company's balance sheet as well. Reliance Communication. Now, if we look at the Reliance Communication, market cap is 1798, current price is 6.50, 52 weeks high is 29.35 and low is 4.85. Book value is 14, stock PE is 2.93, dividend yield is 0, return on capital employed is in minus, return on equity is in minus, sales growth for the past 3 years is in minus, EPS there is no EPS, debt to equity ratio it's too high 16.97, promoters holding though is above 52%, but all other factors, all other key ratios are negative for the company. If you see stock is trading at 0.46 times its book value, this is the only pro. Cons are the promoter stake has decreased. The company has delivered a poor growth of minus 25.9% over past 5 years. Company has a low return on equity. Contingent liability of rupees 9,312. Company might be capitalizing the interest cost. Promoters have pledged 30% of their holdings, which is not a good sign for any company. If promoters need to pledge their holdings, which is not a good sign for any company. This is the peer comparison that you can do with other companies. Let's look at the annual results of the company. Sales, if you see sales of the company are decreasing on a year-to-year basis. Sales of the company has declined to a great extent. Expenses, though expenses have also declined, but if you see there is only a marginal difference between the sales and expenses. Operating profit from 6,334, now it's minus 17. Operating margin, if you see from 37% is 0 now. Interest, though the company has reduced its debt to some extent because the interest over here was 2,924 and now it's only 185. But if the interest of the company has reduced, that means company has reduced its debt, that we need to see how they have done it. Either they have sold their fixed assets, or as we have seen in the con section, that promoters have pledged their shares. Net profit of the company, you see, is the figure is in minus from 3,531 to minus 19,215. EPS is reducing. There is no EPS. EPS is 0. Dividend payout, no dividend. Company is not paying any dividend from last 4 to 5 years. So these kind of companies are not good to invest into. If you see the reserves of the company has gone down drastically from 21,000 to only 2,000. Borrowings of the company has increased from 17,000. Though they have decreased a bit from 49,000, they have become 32,000. But still, comparatively from March 2007 onwards, the borrowings have increased. See, the fixed assets of the companies has decreased. Excuse me. Fixed assets of the company was somewhat around 32,000, and now the fixed assets of the company are only 11,000. Whereas in 2012 and 13, the fixed assets of the company were around 71,000. And it's not a cash rich company at all. This figure is also is negative. So these kind of companies are not at all good to invest into. So this is how you can do the fundamental analysis. In fact, there are, I think, many screeners that are available on screener.in that you can use to filter out fundamentally strong companies, or and you can even create your own screener based on the conditions that I have told. That number one, the sales of the company is increasing on a year to year basis, profit of the company is increasing on a year to year basis, EPS of the company is increasing, ROC is above 15%, ROCE is about 30%, debt to equity ratio is less than 0.50%. So based on all these conditions, you can create your own screeners like low PE and high EPS growth. So these are the companies that you will get. Now you can sort the companies out based on market capitalization. See, this is the query that they have built up. The price to earning is greater than 0 and price to earning is less than 10. Return on equity 5-year growth is greater than 10. Dividend yield is greater than 10. Return on capital employed is greater than 10. So like this, you can make your own. You can customize your own screeners to find out fundamentally strong companies. And once you have the screener, you have list of fundamentally strong companies with you can always keep them in your watch list, and based on your technicals, combine the fundamentals with your technicals. And whenever you get an opportunity to enter into these fundamentally strong companies, you can trade in those companies or invest on those companies based on the setup or the techniques that we use for our technical analysis. Right, so any doubts or any question regarding fundamental analysis, anything that you guys have not understood? See, I've told you 3 or 4 sites that you can use for your fundamental analysis. One is screener.in, one is money control, then you have market mojo, and morningstar is another website that you can use for your fundamental analysis. Also, one more website that you can use for your technicals as well, let me tell you today, is Top Stock Research. Now this is a website that you can use for your technicals as well. See, you here you will get many screeners. See, double top, head and shoulder pattern, ascending descending triangle, double bottom, weekly support breakout, Even there are many screeners based on moving average, exponential moving average support, exponential moving average resistance, simple moving average crossover. Trending up SMA, trending down SMA, candlestick patterns. Based on candlestick patterns, you can filter out stocks. Bullish candlestick pattern, bearish candlestick pattern, weekly bullish candlestick patterns based on indicators. Then based on patterns, double top, double bottom, triple top chart, head and shoulder, rectangle channel. So for your technical analysis purpose, you can use this website as well, like double bottom chart pattern for various intervals. Like this is for double top for short term, this is for medium term, and this is for long term chart list of stocks that they have given you for double top pattern. So this is another website that you can use for your technical analysis purpose. Simple moving average resistance, simple moving average support. You can in this also you can customize your screeners, your alerts, you can create your watch list, your portfolio. So these are the important websites that you can use for your technicals as well as for your fundamental analysis. For technicals, I have told you one top stock research, and for fundamentals you can use screener.in, money control, Morningstar, or Market Mojo, whichever you is suitable to you. You can use any of these websites for filtering out fundamentally strong companies. So anyone has got any query or any doubt? Yes, Yogesh, you want to ask something which is not related to today's session. Please go on. Yes, Yogesh, you wanted to ask some question. Please ask what you wanted to ask. ICICI Prudential chart. Yes, what about ICICI Prudential chart? Let's look at the ICICI Prudential chart. Why did I give buy entry about 325 level? Generally what I do is say if the stock is around 323, uh, then I always, take a round figure. So if stock is at around 327, suppose the stock is at around 327, then I'll always give buy about 330. If now stock is at around 321 or 322, then I'll always keep a buffer of 2 or 3 points, and then I'll keep my entry, because sometimes what happens that if you see in today's case only, it went up till 325, because these numbers, these 25 and 50 and 75, and these round numbers like 100 and 1200, 1100, these sometimes what I have observed over such a long period of time is that they sometimes act as a resistance, a psychological resistance level. That is what my observation is. That's why if you see, if even if the stock is at 321 or 322, I'll give a buy about 325. And if the stock is trading at around 327 or 328, then I'll give buy about 380. Now suppose if any stock is at around 340 or 341 level, then my buy level will be about 350, because I want the stock to cross that psychological resistance level, that round number. Because even today, if you see, though if you look at the candlestick that was formed yesterday, the high was 323, so I should have given by about 323, then what would have happened? Stock made a high of 325 and it came down and took a support from 50 moving average. Because first even I used to take entries based on candles, but what I have observed is that these numbers somehow, I don't know why, but these numbers somehow they act as a resistance. So it's always better to let the stock cross the resistance level. Now if we take an example of Larsen, now see Larsen, if you see yesterday, Larsen was looking good, but the high was 1295. So if I want to take an entry in Larsen, then I will take entry about 1300. Now see what happened about 1300, it went up till 1302 and it went down, it came down from there. So some things we can't avoid, but as much as possible we try to avoid these mistakes. There are some things, if you'll observe market, if you watch market daily and you keep a knee observation in the market, there are many things that you will discover yourself in the market. Because see, there are some things which can be taught, but there are some things that only market can teach you, and that will come over a period of time when you will daily do your analysis, and when you see that you know finding out stock, filtering out stock, and if the stock is going in your direction, it feels really good. But when the stock is going against you, that is the time that you need to analyze that what is there that you are missing, and why the stock went against you. Sometimes the stock is looking too good technically, but still it goes against you. Maybe market is supreme, we know, but in, though there is no negative news, but still the other day the stock goes in the opposite direction. So all these things you need to keep a very close observation on all these things, that where to take entry, where to take exit. Like if I give you example of Havels was one stock that we gave on the Telegram channel, and I gave buy about 705, about this level. I think this was the level that I gave buy about 705, and today it did hit the target because there was a resistance over here. So for few things that you will keep on working over a period of time, you will develop this insight, and you will come up with your some new observations that this is what happens in the market, because some things only market can teach you. Any other question, or should we conclude for today? Any doubt regarding the fundamental analysis part? If you want, I can repeat the ratios. You can please note down the ratios that you need to look into while doing the fundamental analysis. Number one, EPS of the company, either it should be constant or it should be increasing on a year-to-year basis. It should be a dividend paying company. It should be a cash rich company, that is the cash flow of the company needs to be positive. ROE, that is return on equity of the company, should be greater than 15%. The debt to equity ratio for the current year should be less than 0.50%. And ROCE, that is return on capital employed, should be greater than 30. If you want, you can count this also as a criteria. You need to look into the promoters holding. The promoters holding in the company should be greater than 50%. Anything above 50% is considered to be good. The sales of the company should be increasing on year to year basis. The profit should be increasing on year to year basis. The company should have enough reserves with it. So these are a few points that you need to keep into while looking into the fundamentals of a company. Got it? See, I don't get any reaction from you guys. So even I myself am totally blank what to do. Fine, then let's conclude for today. We'll meet again tomorrow. What we discussed tomorrow. See, maybe tomorrow I'll give you one more setup that you can use for your intraday purpose. Not, I will not call it purely intraday purpose, but yes, because the time frame that we'll be using is 1 hour, so that if you're taking position in any stock, then you can hold the position for 2 or 3 days, and if you get a good return in the stock, then you can exit with profit. Fundamental is somewhat complicated. See, Yogesh, it's not that complicated, because to look into the ratios is not, because what we have discussed on a layman's term. We have not gone too deep into the fundamental analysis. Keeping in mind that, say, suppose if you are not from a commerce background, and as I said in the beginning, that to read and to interpret the fundamentals of a company is not that easy. To read the balance sheet and the profit and loss statement, so what we have covered is just the basic. These are just the basic ratios that you need to look into. So it's not difficult to see whether the sales of the company is increasing on a year to year basis, and the profit is increasing on a year to year basis. It's not at all difficult to see what is the holding of the promoters in the company, what is the debt to equity ratio. It should be less than 0.50%. And if you look into the screener.in, you will get to know that the EPS of the company, whether it is increasing on a year to year basis or not. So these are just very few basic points that we have covered, which will give us an idea whether the company is fundamentally strong, or financially the health of the company is good or not. If we go more deeper, if you take fundamental analysis courses, then it is more complicated, because then you need to take out what is the intrinsic value of the company. There are many calculations in that, which is not possible for all to do, because we are basically a technical analyst. We are not investors. Our purpose, we just gave you an overview of what the fundamental analysis is all about, so that if tomorrow anybody gives you some recommendation that this company is fundamentally good, then these are some of the ratios that you can look into and decide whether the company is really fundamentally good or not. So now you know the key ratios that you need to look into to figure out whether the company is fundamentally strong or not. You know the technical analysis. So now you can say that you are somewhat independent. You are not dependent on someone else. If you want to trade in the market, you can take your own decisions based on whatever little knowledge that we have acquired. Because previously what we were doing, we were trading based on the knowledge of others and ended up losing money. But now that is not the case. We have done the technical analysis. We know at what level to enter into a stock, whether the stock is at a support, whether it is a good time to enter at that point, or whether the stock is at a resistance. Now if any new company is there, then we need to just check the fundamentals of a company. There's some key ratios, and then we can combine it with our technicals, and then we can take decision to trade in that company or to invest in that company or not. Because generally, technical being a technical analyst, we are only traders. We trade. We are not long-term investors. People those who follow fundamental analysis only, they are very long-term traders. They don't mix technicals with their fundamentals. They invest purely on the basis of fundamentals, and for that they do a lot of research. I mean, we have seen nothing as far as the fundamental analysis is concerned. Now if you see over here you also have the company's website. If you want to do more research on the company, be it any company, you can go to the company's website and you can look into the details of the company. Let's take example of Hero Moto only. See here, they have given company's website. So you can go into the company's website and you can do whatever detail analysis, whatever detail research, what the company is doing, who are the clients of the company, what are the future prospects of a company, what are the future projects of a company, that you can look into the company's website. You can do research on the company's management, who all are there in the management of a company. So there are a lot of things involved in company in fundamental analysis. We have covered nothing. We have just covered it briefly to give us a brief idea as to decide on the spot whether the company is fundamentally good or not. That's it. Yes, like yesterday, Chetan, I think Chetan was saying that option chain is somewhat complicated. Yes, I can for option chain I can say that it's a bit complicated and it will take time to understand. But if option chain also, if you look into option chain on a daily basis, then I think it will not take much time for you to understand that as well. Fine, I think then we should conclude for today. Tomorrow we will see one more trading setup which you can use for your intraday purpose. And then I think we have covered almost all the topics. Nothing is left. Then what we can do is for 3-4 days continuously we can sit and do the stock filtration, and if you want we can do the stock filtration process. Yes, Ichimoku Cloud is there. Then what we can do is on Monday we will take Ichimoku Cloud. And Ichimoku Cloud, actually, Imtiaz, it's not only an indicator, it is a system in itself. Ichimoku is basically a trading system in itself. It's not only an indicator. So on Monday we will discuss Ichimoku. Tomorrow let's look into the money management. What do you want me to talk about money management? How to put a stop loss or what? See, money management. One thing I can tell you that if you are finding out any fundamentally strong company, then if you want to invest in a company, then initially don't invest more than 10% of your capital into any company. Say if you have 1 lakh as a capital, then don't invest more than 10%, that is more than 10,000 in any company initially, because you never know that something, if there is some bad news or something of there's a correction in the company. So then you should have, if the company is fundamentally strong, then there is not a problem. Then if there is correction in the company, if the prices go down, then you should have enough fund to average it out, to buy the stock at a lower levels as well. So initially go slow, Even when you start trading in the market, see right now you're doing paper trading. When you start trading with actual money in the market, then start with only say 5 shares or 10 shares. Then slowly when you gain confidence, then you go on increasing your capital and your buying power. Because see, no matter how much paper trading you do, your actual emotions will come into play when you will trade with your actual money. Because right now you know that your money is not involved in trading. It's only paper trading. It's only the virtual money that you are trading on. So even if it's a loss or it's a profit, it doesn't bother you much. But when your actual money, because we don't only need to train our eyes to identify the trading opportunity, we also need to train our minds, our emotions. We need to control them. So for that, when you start trading, start taking small baby steps. Start with 5 shares, then when you earn profit in them, then move on to 10 shares, then slowly go on increasing your capacity. Because when you're trading with actual money, that is the time you need to control your emotions. So we need to control that as well. So I think now only your Ichimoku is left. So tomorrow what we'll do that one trading setup I'll tell you. Then Monday probably we'll do the Ichimoku. And for the rest of the days, say Tuesday, Wednesday, Thursday, Friday, we'll do the stock filtration. We'll analyze the Nifty as a whole. Then if possible, we'll look into the option chain as well. So that if you that you will also get into the habit of looking into the option chain and analyzing it. Then we'll do the stock filtration. Fine, then let's conclude for today. See you guys tomorrow, same time, 7. Bye. Take care.